Welcome everyone to this week's weekly recap and outlook, where I'm simply going to be doing my best to analyze the higher time frame charts, talk about what's been going on, and what we could possibly expect going into this next week. Now, I'm just going to be doing my best. Hopefully this will allow not just you guys, but also me to get better, and let's take a look at what's been happening. So, first thing I want to talk about is we actually had a daily BPR right here. This is an area where you have a bearish fair value gap and a bullish fair value gap overlap with each other. This overlapping area is the BPR. You can see how price came back in and respected this area. Then you'll also note that this series of down close candles is a daily order block. If you take the midpoint of that, that's a high conviction level, and you can see how the market held that midpoint. This midpoint is specifically called the mean threshold of that order block. Something else that's kind of cool is if I go into the lower time frame chart, I want to talk about the Trump pump here actually before we get into more of this week. But we had S&T form at these lows, so that's a break in correlation between the NASDAQ and the S&P 500. You had a very low time frame BPR here, but this is still a solid BPR. You can see how when I bring this over, we held this area very, very well. And so we had S&T form, we had that BPR, and then we had a new week opening gap that overlapped with this same area. So this was a high conviction area for us to possibly rebound. You can see if you measure out standard deviations of this final manipulation move down, this is actually pretty crazy. You get the exact top. This is the 4 to 4.5 area. This is your max extension. And what I do with this is I just try and measure out the most obvious manipulation. So since this is like the obvious, sharp, fast manipulation, that's the one I'm going to measure. And you can see how that 4 to 4.5 rested right up there. So next thing I want to talk about, I'm going to get rid of the opening gaps because it's kind of a lot, and I usually keep them on a separate tab so it doesn't get overwhelming. Next thing I want to talk about though is you can see this was also not only this series of down close candles mean threshold, but this is also a daily order block. So this right here was held, the candle bodies held this area. Then let's see what else. We have low resistance liquidity here, but something about low resistance liquidity is you can leave it for quite a while without going to go run it. You can see this was the case here earlier this year where we had generated lows built up for quite a while before we ended up running them way later on in the year. This was in April. We didn't go run these lows until 3 months later. So a lot of the time, the market will generate lows like that for quite some time. And you can see the market wanted to come back to, you can see the market wanted to come back to this weekly imbalance here, this gap in highs and lows. You can see that from there to there, and the market held this weekly fair value gap. So the market will do this a lot where it generates lower highs or higher lows. You can see this, it did it here, but we didn't go and run this until 4 months later. So I think a very similar thing could be true here. There is actually even there's equal lows on the S&P 500 actually, and they are right here. So the market will probably come back for those, especially on the S&P 500 because it left those equal lows. But I assume that it will come back for these as well. The problem is I don't know if it's going to come back for it right away. You can see we're very bullish. We're respecting bullish key levels. We're respecting, if I pull up here, you have the weekly chart. We're respecting this weekly order block. I guess maybe you need to measure it like that, but still, we pushed into that weekly order block and pull the daily chart here. I guess the weekly chart. And we have this breaker block, which is a low, a high, a lower low, which swept out these lows, and then a higher high. So this is a weekly breaker block, and so far we have not only closed above it, but we are now coming back in and holding it. It's also interesting because this is a weekly order block here. So we're just, so far, we closed right around this, and we opened right around this weekly order block. So far it looks like it could be respecting this weekly order block level. Hang on a sec, sorry. My phone's going off. So yeah, like I was saying, oh my gosh. So what I like to do is I like to measure out different manipulation moves. So I just take the most obvious ones. And so the ones that are the most obvious to me are on the higher time frame are this one, right? So you have your 2 to 2.5 up here. You have this one. See how this is the final move down? I like to measure out the final moves down because that is the manipulation, right? This was a manipulation into this breaker, low, high, lower, low, higher, high. So this is a breaker. But this was also a BPR. See how that BPR was respected? And then also, this was a daily order block. And then also, this was let's see here. It was this, the top of this weekly order block. Alright guys, sorry I had to go talk to my mom real quick, but really quickly I want to review another trader's analysis of this week to come and this past week. So this guy's name is Diego, so definitely go give him a follow, but I think it's important to look at other people's analysis so I have an unbiased viewpoint on the market. He's saying we swept out this monthly high here and we closed back in the range. Swept out that high. This is on the weekly chart. We have equal lows and equal lows. But he's also noting we're reacting off of a bullish key level, and so in the short term we should at least take previous week's high, which we actually already have done. You can see that this is Sunday. I'm filming this Sunday afternoon, so the market's already opened and we've already taken that. And so anyway, and then I think the last thing he says is look out for these daily order blocks. But in my point of view right now, although we have those equal lows, especially on the S&P as well, a lot of the time thinking you have to go there right away will wreck you. And I'm just looking at the chart for what it is right now. Right now we are showing a reaction to this BPR, which is in discount of this leg here. And that BPR overlaps with these new week opening gaps and this mean threshold here. And then if you measure out standard deviations of that all these different manipulation moves, like this to me seems like the yearly manipulation. You had accumulation, manipulation, and then this seems like distribution. If I measure this out, it's showing we could still go a bit higher, and if I measure out this manipulation here, got that 2 and 2.5 in that same area. So the idea being, like, I'm not totally convinced we have to go down and take that out just yet, but if we start reacting off of key levels like this bearish daily order block and we make a move down and information tells me otherwise, I will keep that in mind. So, but yeah, I do think we will take this out eventually. I just don't know when. and there's equal lows here on the S&P 500. So with that, I will leave you guys there, and let me know your guys' thoughts in the comments below. But every single week, we are going to keep getting better at this and keep getting better at analyzing the charts and understanding the higher time frame perspective. With that, I will see you guys in the next one. Bye.